Hey everybody, what's up? Today we are back with another stock analysis. So today we are looking at ZETA Global. So they are a marketing technology company based out of New York. I'm not sure too much about this company, haven't looked into them at all. So let's just get right into it together. Make sure to subscribe if you haven't. I make these videos every single day of the week, and that's about it. So let's get into ZETA Global. So starting off, we could see marketing technology software company engages in provision of enterprises with consumer intelligence and marketing automation software. Um, Enables customers to target, engage customers through their software that they deliver through all addressable channels, whatever. Marketing company, market cap 4 billion, slightly over 4 billion. um, Target price is $37. Long-term growth rate is at 32%, which is really high. Current price is at 17.92 right here, so definitely significantly under that target. One thing to note is if you look at the mini chart here, they had a high of around $35, so fairly close to that target. And it looks like in the past few months, they just dropped off pretty hard to 18. So we're going to look into what caused that. Most likely their last earnings report, and also kind of go a little farther into their chart once I'm done with the financials here. So starting off with their financials, going into the income statement. One thing I forgot to do actually was go over their growth summary. So this is the estimates of their growth over the next couple years. So they don't have any estimates past 3 years so far, but everything that they have is really positive. 25% sales growth over the next 3 years. This is also CAGR, so that's per year, which is really, really solid. Everything else looks really good too. So definitely some positive estimates for the company. But anyway, looking into their income statement, we could see this is over the past few years. We'll zoom out here to go over the past couple years. So very solid sales growth. We could see 700 million last year, over 900 million in 2024. So, and it is 2025 now. So last year is 2024. 2023, they had significantly less than they do now. So all the growth looks really solid. Gross income is always positive. Operating looks like it is coming towards positivity. So they do not have positive operating or net income yet, but they are fairly close to it. I'd imagine within, just based on the way this is progressing, possibly within a year or so. However, it could also be fairly soon, depending on what the quarters look like. So, based on the quarters here, they could be positive operating within a quarter, maybe 2 quarters, but they have really worked towards narrowing those margins down. And even the net income, they could be having a net profit within maybe 2 or 3 quarters. Um, Definitely next report, if they do show these positive, there will be very significant growth with the company. That's usually a huge catalyst for a lot of companies once they turn profitable. But so yeah, definitely looks really solid there. We're going to zoom back out to the years here so I could go over the basic shares. So overall, their shares have been diluted fairly significantly, going from 217 to 230 million in the past year. So not fantastic there. However, again, just based on their sales growth and the way that their profitability is looking, it seems like they will be perfectly fine despite diluting their shares. No big deal here for that. Going into their balance sheet now, we can see their total assets have again also increased every year. Debt doesn't look too bad. They do have a fair bit of long-term debt, but their cash is very significant, so no big deal there. Looks like other than that, they do have a decent amount of current liabilities, but it's mostly just payroll. As you can see here, actually, it's entirely not payroll, but miscellaneous current liabilities, payroll could be included in that. But overall, doesn't look too bad for their balance sheet. Lots of cash, very little short term, not a crazy amount of long term debt, especially considering how much cash they have. And actually, it barely increased in 2023 at all. And this actually doesn't include 2024, which we could see here once we go into the quarters. So, overall, long term debt has been increasing throughout 2024. However, again, as you can see here, which I'm assuming is because of a stock offering, they have a ton more cash in the company now. So this long-term debt is very little. They may even use the cash to pay it off fairly significantly, but we'll have to see. But even still, before that, the past 6 quarters, actually basically every quarter for the past 2 or 3 years. They have barely increased their debt at all. So no big deal there, honestly. Let's get into the cash flows now and see what we're looking at. So operating cash flow continuously positive. That is very, very good to see. Almost entirely from funds from operation, losing some to changes in working capital, which is no big deal there. Other than that, investing activities, nothing major. Last year had some acquisitions, which is always good to see. Other than that, CapEx is actually on the lower end of where they usually are, just based on where their average is across the last 10 or so quarters. But net investing cash flow looks perfectly fine. Financing cash flow, we could see they did get most of that cash from offering some stock, which we did actually see on the income statement earlier with their extra shares that they had. But overall, not bad here. They have been, other than the past stock issuance, they have been slightly repurchasing some shares. So that is a good sign, at least for the company, that they are working on doing that. But biggest thing here, free cash flow, consistently positive every single quarter, and actually increasingly positive over the past 3 quarters. 2024 was clearly a very good year for this company, going from 18 million free cash flow to just under 30 million. So definitely a very significant increase there. Now let's go into their segment history. We could really see a visualization of their sales growth. And I believe they've only been public, or at least only had data available for the past 5 years, but you could see very consistent growth, basically a straight line tilted up with their growth. And one thing to note here is their integrated platform is a lower percentage than it used to be, but it is now becoming more important, going from 23% of their income to 28%. So definitely, which we could see here, a much bigger slice of the bar there from their integrated platform. So they could be making that a bigger part of their business going forward. But overall, their direct platform is still the largest part of their business. Going into the ratio analysis, we can see how their ratios are doing. This is their fiscal year, so not including 2024, which obviously we saw was very good for the company. So that is what we're going to look at, is 2024. Gross margin is basically where it has always been at 54% currently. SG&A to sales has been coming down a lot, which is fantastic. This is kind of a sign that I'm seeing in a lot of companies recently that basically says their growth phase is working out well, and they're starting to reduce costs associated with that growth phase of their company. So more profitability, more income, massive sales growth, and less costs is basically what's happening here. And as we talked about earlier, their operating margin is getting closer and closer to positivity. Same thing with their net margin, coming down very significantly. Just last year, at the end of last year, their net margin was at 25%. Now they're at 13%, which is massive improvements over just a year, which is really solid there. Return on assets and equity looks fairly decent. They've never been positive in the past 3 years with that, but it's looking like we could see positive growth there within a few quarters, possibly. And one other thing I want to look at is their debt to total equity, which we could see is very, very minimal. They've actually brought it down a ton. Usually, I go off of the 80 to 100%. Anything below that range is good. And you could see they very, very quickly went down from 170% in 2022 to only 41% now, which is very, very healthy, very manageable for any company. So definitely looks really good there. So now let's check out their recent earnings reports, see if we could get anything here to kind of show where the company has been recently. And it looks like we may get some. Here we go. So going into their earnings reports, looking for some solid information. Accelerates revenue growth looks promising. So here is some Q3 results that they had. Delivered record revenue of 268 million, 42% growth year over year. That is enormous. Direct revenue grew 41% year over year, and increased direct revenue mix by 300 basis points to 70%. Scaled customer average revenue per unit to 557,000, record increase of 33%. So this company, massive improvements, huge growth. Cash flow, operating activities, 34 million, 51% increase in cash flow year over year. 93% increase cash flow year over year for free cash flow, which is even better. And then Q4 revenue growth guidance was increased 40%, which is a massive massive amount. So overall, here's some third quarter highlights. Trying to read through this quickly to see if there's anything I want to point out that I didn't already go over. So quarterly super scaled customer revenue per unit increased 30% year over year. I'm assuming what this is just their larger customers that spend more money on the company. But basically across the board, everything is massively increasing. Net loss of 17 million, driven primarily by stock-based compensation. So they paid out too much stock and therefore took a loss, is what I'm getting from that. Net loss in quarter three was 43 million, or 23% of revenue. So it seems like they could be positive if they didn't pay out $47 million in stock compensation, which is interesting to say the least, but definitely something to pay attention to, because they could have had a profit and didn't because they paid their employees too much. So I don't really know what to go with off of that. But anyway, guidance full year 2024, increased revenue, increasing adjusting EBITDA, increasing free cash flow. Everything increases across the board for their guidance. I don't see anything for 2025, though, which is something to consider. And other than that, I think everything else here is basically the same thing. Statement to acquire, possibly acquiring a new business. Expanding my comments, we are proud. Positive one for the industry and ZETA. Okay, this may be just them commenting on another company. And false and misleading claims. Let's look into this as well. This could be interesting. So, highly misleading and false claims about ZETA was written with a clear agenda to drive down value of our stock for the benefit of people betting against us. So it looks like recent authorization of $100 million stock repurchase plan. That's positive news. It looks like there was kind of like a campaign against the company by some kind of media outlet to discredit them. And basically, they're just saying it was not true, which I think we can possibly see that in the stock price, because they have, even this was actually during their last earnings report. So day after their earnings report came out, their stock price dropped 23% and then 37% in 2 days. So basically cut in half in 2 days, which is insane. But overall, looking through their recent like reports and everything, it looks fantastic. So this could be kind of a knife drop situation where all their numbers look really good, solid growth, huge margin improvements, and it got sold off for whatever reason. I don't really understand why it got sold off. If someone in the comments can let me know why, I'd definitely be very interested. But this could honestly be a huge undervalued situation where they're well over, they could go up 100% from here and hit where they were when they reported that phenomenal earnings report. So definitely something to think about there. But overall, that's all I have for ZETA Global. Very interesting company, definitely worth looking into more if you're interested. Highly recommend checking it out for yourself. Do some research. Thanks everybody for watching. Make sure to subscribe, and I will see everybody in the next video.